Good morning and welcome to today's pre-market report. Now in today's pre-market report we'll be taking a look at the expiry play for today with a more particular focus on the Nifty Index. Now usually I would cover the news here, but today I believe there's an amalgamation between the news and the trading in a very big way. Why? Number one, we have multiple expiries. So we have the Nifty Expiry, the BankNifty expiring, the FinNifty expiring, the MidcapNifty expiring. This does not happen. So it's a new phenomenon of all this coming today on one Thursday, and that will end up affecting our markets in a big way. Second, we have the Fed rate decision. Now, as when I'm recording this video the night before, the Fed rate has not come out, so I do not know what it is. But I am looking at it in one way. Whether he cuts rates or he doesn't, our market will only react to it for the first 1 hour, according to me. Now, why do I say that? We are 1 day away from our budget. So the market's focus is going to be more on that rather than what the Fed governor is going to do. So the Fed news is very important for our market and all the markets. But I believe for our equities and indexes, we will react to it once we open. I would say between 9:15 and 10:30 max. After that, we're going to start trading purely based on technicals, plus the hopes and dreams of what the media sells for the budget. Why I'm saying that is, if we look at it this week, I'm actually shocked at one thing. The media has not been playing the budget how they usually do. This is as usually in all the past budgets, 2 weeks before the media starts drum beating that this might happen, but in a very big way. Literally your phone gets blown up by notifications from investing.com or Money Control, whichever financial site in India, that this will happen, that will happen. This time it's not happening. So now I expect them to pick up pace today because there's only 1 day left and they got to capitalize on that as they work on views. They're not working on actually providing correct analysis, whether you take Money Control or any other platform. So that I believe will start affecting our markets, and due to that I believe what the Fed is going to do will only play a role for the first hour. After that we come into what really is going to be happening for us this Saturday. So what are our hopes and our dreams? Now due to that, I believe the Fed event, don't pay that much attention to it in today's trading session. Now, how do I expect the indexes to trade? Now, due to what I said just now, I believe today there are two risk factors to option buyers and option sellers. Number one is whether we get a V-shaped move, or number two is whether we get a sideways move. Now, why I'm notifying this, which I usually don't do in my videos, is as I said, today we have multiple expiries. So, okay, MidcapNifty is an index that moves with its own pace. It does not rely on what the Nifty, BankNifty, FinNifty are going to do. However, the Nifty, BankNifty and FinNifty are all correlated to a large extent. So, if the Nifty, for example, is trying to pull us up, while the BankNifty is trying to pull us down, that will cause sideways movement. That will be then make it an option expiry, which will be beneficial to option sellers, but bad for option buyers. On the other hand, if the indexes decide to move in one direction but in a volatile manner, then I expect a lot of the option sellers to get beaten black and blue, and then they'll go to the social media and complain after. Why I say that is I have seen a pattern when I look at the Indian social media trader, is that most of them tend to just sell the range and then sit. They do not know why they're selling the range, apart from, yes, they're looking at this is the current price, they go and sell, let's say, a few standard deviations up and a few standard deviations down the full range. But they do not know exactly why they're selling, what level they should be selling. They're just doing that. So if we get a V-shaped move, these guys are going to get beaten black and blue, which will also help option buyers. So today's expiry, if you're an option buyer, V-shaped move, you're going to make a lot of money if you're quick on your feet. If you see the Nifty, BankNifty or Nifty, FinNifty, either of the indexes pulling towards different directions, then as an option buyer, back off, focus on option selling, as you're going to make money in that sphere. So that's how I'm going to trade today's trading session. Today we cannot say that, okay, we're going to trade, like I usually say, there's a more upside potential, more downside potential. Today is not that, because we have four expiries in one single day, plus we have the budget, plus whatever the Fed has done, because I do not know yet, because I'm recording this before the Fed event. So all that will come into play in the whole thing. So how will I trade the Nifty? I've chosen to focus only on the Nifty Index. This is, I can cover all the 4 indexes, but I believe it will just cause more confusion. I personally will not trade all the 4 expiries. I will trade the Nifty, BankNifty and MidcapNifty, or expiries via option selling and option buying. FinNifty, I'm not going to bother with it. This is, I think, if you're going to trade a bigger quantity, it has too much, it already has too much of a liquidity problem if you're big size basically trader. So today, when there's so many expiries, I believe that volume will be stretched thin, because whatever people say online that they've got this, most do not have the capital to spread it across all 4 expiries. So due to that, they're gonna, and some will, who like BankNifty more will focus there, who like Nifty more will focus there. So that will end up taking the volume away from something like FinNifty and even MidcapNifty to a large extent. So I personally will be trading this tree, but now I'm covering what the Nifty is gonna do. Now, according to me, as long as the Nifty is between, now I've put the 23,180 resistance in blue, as that's the resistance which I had given clients yesterday, and we can see how it stopped the up move. Now that's a very key one. So according to me, as long as it's trading between 23,180 to 23,250 and 22,900, this is one big juicy box range. So this is the range I believe the Fed event will be trading inside. Yes, high probability that we're going to get good moves within this range. Now within this range, you cannot think you're going to get a clean up move or clean down move. You better be ready to trade both sides. If it breaks 23,250, then you can take a long to 23,320 and then 23,400. 23,400 breaks, then 23,550 opens. On the other hand, if it falls, if it let's say opens and goes, there's a support at 23,040. If it breaks that, then it goes to the major support which I highlighted of the box range is 22,900. If it breaks that, I expect 22,820 to be opened pretty fast. It breaks that, and 22,750 and 22,650. So today's trading plan is pretty simple for an option buyer. Between 22,900 and 23,250, trade the range. 23,040 is the support which is in between. If you are below it, it comes resistance. If you are above it, it becomes support. It's as simple as that. But once you get out either on the top of 23,250 or below 22,900, then you'll get a one clear directional trade, and that I believe will wreck a lot of option sellers. As I said, whatever name, I can take names, but I don't want to do that. But what I've seen, they would just sell the range. They do not know why they're selling what they're selling, but they just sell the range and things go on. So according to me, that's my trading plan for option buying. Now, what's my trading plan for option selling? Now, since I do not know yet what the Fed has done, if I see we are opening between 22,900 and 23,250, then I'm going to simply sell that range. If I'm going to go aggressive, if I'm going to go cautious, then I'll sell 22,900 to 23,320. That range. So above 23,320 calls and below 22,900 puts. Now, why am I taking such a cautious approach? Now, I have shared multiple times, me and clients are holding PE cells. We booked a lot of the profits yesterday, a good portion of the profits of the ones expiring today. Now, we have made good money already from this week expiry. And now the remainder of the lot which we are holding, I expect them to, we are holding with a profit stop, so there's no risk there. So if it opens and profit stop is not triggered, then we're only going to go into more profits. So since a good amount of money has been made already, so I don't want to play that aggressive. As this expiry, I want to play more option buys than option sells. Unless I see, as I said, the index is pulling in different direction. If I see the indexes are moving in the first 15 minutes in tandem, then I will be more of an option buyer than an option seller. And the option selling, as long as we're within this range, I'll sell this range, put a profit stop. Naturally, if it breaks one side of the range, that side will be stopped out. Profit will be taken by the stop of intraday, and the other side will go on to zero. So my trading plan is as simple as that. I think today is going to be a big opportunity for a lot of traders, and if they're quick on the feet, they're going to make good money today. If they're not quick on the feet, I suggest to step aside from the market today, as they will end up paying a heavy price for trying to interfere in such expiry when there are many indexes doing the same. So that's it for today's video. Thank you for watching. Any questions, drop them in the comment section below. Any suggestions, also drop them in the comment section below. And click the subscribe button and hit the notification bell.